Here are the 17 strategies from ex-Goldman Sachs manager Chris J. Cathey to enable you profit from the market. He worked from 1993 for Goldman Sachs at their offices in New York, London, and in Frankfurt, Germany. He is famous at Goldman Sachs for reversing a loss of $400 million by inventing a quick hedging technique used by traders to date.
One of the biggest mistakes traders make is jumping into trades without a clear reason. Trading isn't gambling, it's a calculated game of risk and reward. Before putting your money on the line, have a solid reason for why you believe a particular asset will move. Don't trade blindly or based on emotion. Scalping can be profitable short-term, but difficult to sustain long-term. Transaction fees can eat into your profits quickly. The market is incredibly volatile, especially short-term. Scalping is probably not the best long-term strategy. Trading is as much about mental clarity as it is about strategy. A calm and focused mind can better analyze market trends and data. If you're feeling stressed or emotional, you're more likely to make impulsive decisions that can hurt your portfolio. Go for a walk, grab a coffee, meditate, or engage in any activity that helps you clear your head. Taking a break can provide a fresh perspective. Remember, the market will always be there. Your mental well-being is more important. A relaxed mind can spot opportunities better. When you return with a clear head, you'll be in a better position to make informed and strategic trades. So, don't force trades, clear your head first. Bad days happen to everyone, even seasoned pros. Sometimes your trades just won't work out. The important thing is to not let those bad days derail your entire trading plan. Don't beat yourself up over a few losses. Learn from your mistakes. Adjust your strategy if needed. Come back stronger the next day. Charts and news, a delicate dance. The market often prices in information before it's publicly released. The market is forward-looking, reacting to anticipated future events. Don't just rely on news headlines for trading decisions. Dig deeper, analyze fundamentals, and anticipate market moves. University. It's not just about the degree. The most important thing I learned in university was how to think critically and solve problems. These skills have served me well throughout my career. Never stop learning, questioning, and challenging your assumptions. Riding the winning wave, increasing positions. Know when to add to your winning positions. Never increase exposure to a trade going against you. When a trade is working in your favor, consider adding to your position. Do this strategically with clear risk management parameters. Know when to take profits off the table. The trend is your friend. Identify and ride it. In the world of trading, recognizing the trend is crucial. It can be the difference between success and failure. Trying to fight the trend is like swimming upstream. It's exhausting and often futile. Many traders make the mistake of going against the flow, only to find themselves overwhelmed. Instead, identify the prevailing trend and trade in that direction. Do your own analysis, manage your risk, and stay informed. The market has its own rhythm, and understanding it can give you an edge. Have a plan for exiting the trade. Setting up stop-loss orders and having a clear exit strategy can protect your investments. It's not just about entering a trade, but knowing when to get out. Trading with the trend increases your odds of success. When the market is bullish, riding the wave can lead to significant gains. Celebrating small victories can boost your confidence. Don't blindly follow every market move. Critical examination and cautious decision-making are key. Always be prepared for market fluctuations and adjust your strategies accordingly. Technical analysis, your entry and exit guide. Technical analysis helps identify trading opportunities. Use it to confirm your trading decisions, not dictate them. Don't lose sight of the bigger picture. Use technical analysis to determine optimal entry and exit points. The market is constantly evolving. Be adaptable, open to new ideas, and always be learning. Don't get stuck in your ways. Experiment with new strategies and find what works for you. trading is a journey, not a destination. Setting rigid profit targets can lead to emotional decision-making. Focus on managing your risk and letting your winners run. Don't hold on to trades too long trying to reach arbitrary targets. Be flexible and adapt to market conditions. A stop-loss order limits your potential losses on a trade. It's better to take a small loss than let a losing trade spiral out of control. A stop-loss is your safety net, protecting you from emotions and market unpredictability. Use it to safeguard your trading account. Patience is essential in trading. Control your impulses and wait for the right opportunities. Patience helps you identify the strongest opportunities and avoid chasing trends. In bear markets, patience helps you avoid panic selling. Wait for the optimal time to re-enter the market. Demo accounts are valuable for learning and testing strategies, but demo trading is not the same as live trading. There's no real money at risk, so you don't experience the same emotions. Live trading involves an emotional roller coaster that demo trading can't replicate. Use demo accounts to practice, but be prepared for the real deal. Volatility, the double-edged sword of trading. High volatility creates potential for big profits and big losses. Price swings offer opportunities to buy low and sell high. However, those same swings can lead to quick losses. Understand the risks and rewards of trading in volatile markets. Manage your risk carefully. Time frames, trading versus investing. Decide whether you're a short-term trader or a long-term investor. Your time frame dictates your trading strategy. Choose assets, entry and exit points based on your time frame. There's no right or wrong answer. It depends on your style and goals. Be clear about your time frame before entering any trade. Mentors guiding you to your own path. Mentors can't trade for you. They teach you to think for yourself. They help you analyze the market and develop your own strategy. Mentors guide and support you, but you must put in the work. Learn from your mistakes and carve your own path in the markets. Outro. Subscribe for more trading insights. 17 powerful trading secrets from Chris Cathey. If you found this video helpful, give it a thumbs up and share it. For more trading tips, hit the subscribe button and notification bell. Keep learning, growing, and crushing it in the markets.